So lots of us on the desk were trading COH. Let's set up the trade. So yesterday they had an investor day. The news that came out from COH was seen as very disappointing to the marketplace. They talked about same-store sales being weaker than a lot of the street had expected. They talked about closing some North America stores. They talked about sales being weak in North America for the foreseeable future. So generally, the news overall was not as good as the street expected. It was disappointing. The stock was very weak. All right, so we've got a news catalyst on day one. The stock is very weak. It closes near the bottom of the weak downtrend on day one. And now we have a setup for what? For what type of a trade? Second day play. So we've talked about this in the past. When there's real news in a particular stock in our markets, as a short-term trader, there's waves of 2 and 3 days. So the first day, even though COH was down a lot, there's still potentially meat on the bones. And there potentially is less competition on day two it's less crowded on day two than sometimes on day one. And we've got prices that were put in on day one that we can use. So the low for COH was what? Okay, 35. 35 is a level that we're going to use from today. If it gets below there today, then we're thinking about shorting the stock, following through from yesterday. So it gets below 35. It doesn't really go down. It's kind of trading above and below 35. And on the desk, one of the guys said, excuse my language, this COH sucks. And I tweeted, COH doesn't suck, okay? It's potentially a market-making program above and below 35. And here's what happens when you sit there. So you're short, right? And human nature is to want the stock to go down. I'm short, I'm smart, this is what I want to do for a living. I've got money invested in this trade. I would like it to go down now because that makes me feel more comfortable. And that makes me feel smart. I've won. That's not the way that you really want to be thinking. You want to think better, different, more constructively, which is, I can't control whether or not the stock is going to go down. And if it goes down, it doesn't make me smart or good or anything. I have certain trades that I want to make, and if I make 1,000 of them, I will be right more than I'm wrong, or I'll be right enough so that I'll make money. That's what we do here. And we're wrong a lot. We've got a second day play. We've got systems to actually trade that particular setup. Let's just pull the trigger, and now watch what's really going on in the marketplace. Okay, so if you sit there and you say, COH sucks because you got short and it doesn't go down right away, you're not spending your energy thinking about what's potentially really going on. So what was potentially really going on was, well, it's just a market-making program above 35 and below 35. But since we have experience with these patterns, perhaps a little bit later, it will start to break. And if we're just not focused on COH sucking, we will see the price when it will really start to go down. We will see that level, and that level in watching COH was 34.85. Below 34.85, COH was going to stop sucking and was a spot where you should get bigger. VWAP was about 89 cents, but below that 85 cents, based on the price action from the open, above and below 35, that was going to be a significant price. And on the other side, if you wanted to play it from the long side, 35.10, if it got above 35.10, for those that are bullish on COH, perhaps they think it's oversold, that would be an instructive price. Okay? The other thing you want to be thinking about is there's just different types of ways that stocks go down. So a lot of times, and the best way is we see an important price. Let's say 34.85 was an important price for us intraday. It touches 84 cents, and then it moves away from that price, perhaps all the way down to 34.35 quickly. And then it doesn't pull up that much. We see the weakness. It shows us the weakness right away. That's the best pattern. right? But there's other patterns, and one of the other patterns is this slow grinding down move. And if you're invested in coach sucking, in that negative energy about it not doing what you want it to do right away, gets below 35, go down really quickly, you're not going to be thinking about the other types of ways that it can trade. As a new trader, you're not going to be seeing the nuance of what it actually looks like when it is a slow grinding down play, okay? Or what it looks like when it's a fake breakdown. You're going to have to learn the different ways stocks trade. They don't just get below levels and tank. They don't just hold levels and go up. All right, they don't just trade above and below certain levels. So you wanted to be thinking about, maybe this is a market making program, and if that's the case, it doesn't suck, it's just I don't want to lose a lot of money in a potential market making program above and below 35, so let me think about how I want to attack that. And then maybe it's a market making program getting ready for a slow grind down, and if that's the case, how do I want to attack it? I want to short a little bit below VWAP, 88 cents. I want to short a little bit below 85 cents, a little bit of the level. I want to short a little bit below 75 cents. When it pulls up and it doesn't get above 80 cents, I want to think about adding to my position. When it goes down to 70 cents and doesn't get above 75 cents, I want to add to my position. When it gets below 70 cents, the low of the morning, I want to get short some more and set some stops at 81 cents. The point is, I want to think about, I want to be spending my energy thinking about what's going on in the stock and not being emotionally invested in what I need the stock to do, because that's a waste of energy, and that's a certain path towards underperformance. All right? It's easy to sit there and say it sucks. And if you look at the chart, and look, we'll see where this goes. It didn't suck. It didn't suck. And lots of people, most traders sit there and they say it sucks, and they blow out of the position when it ticks above 35, and they go and get upset and they move on, and they don't understand what's really going on with the stock. It was an above-below 35 market-making program that needed to get below 85 cents, and when it got below 85 cents, it was a slow grinding down move. And we're now in the position, I have some pretty good size in this position, and I don't know where this is going to go, but I'm looking for the trend to stop. So I'm going to look for, maybe somebody comes out and defends the stock. That might make it go up. Something intervening needs to occur for this stock to go back up. I'm going to look at the volume and look for spikes and price action to the upside to show me the bottom, like we saw in cores the other day. I'm going to look for capitulation, a steep down move with increasing volume. That might be the bottom. I'm going to go to my longer term charts and look for longer term levels. But there needs to be an intervening force. Perhaps it will break the 5-minute downtrend. Maybe that's what will turn it around. But my energy now is focused on playing out the trade that didn't suck. Okay? All right, thanks. Hi, I'm Mike Bellafiore, author of The Playbook and One Good Trade, co-founder of SMBU and SMB Capital here in New York City. If you want to learn more about SMB, please go check out smbu.com. Check out our blog where we share tons of trading tips, trading stories, trades we're in, trading anecdotes, and also take the time to sign up for our 10-day free training program, which we offer to the trading community at smbu.com. We hope you enjoy it. We hope to see you on the site. Trade well.